So the dollar, that's become the theme of financial markets now, hasn't it?
It certainly has. And the funny thing is, when I was on your program and I said, I believe the dollar's put in a major bottom, I guess a few people probably laughed at me. But here we are, the dollar soaring and roaring, and the euro is tumbling, and people are now scratching their heads. And I was telling you guys that was going to be the theme, and that would also be the catalyst for gold going down. And both have played out that way. So yeah, sometimes we get it right, and again, the writing was on the wall, and it's been a tremendous move in the dollar, and you can see that the strength is still there, and it should continue for some time.
You really think it's going to go on? So, well, to me, you always say, and you've told me this, you taught me a lot about markets. The markets, every price in every market tells a story. To me, this story is telling me, oh, maybe the problems with the euro and all of those marginal players in the eurozone isn't done yet. Maybe Deutsche Bank really is not a fully functioning bank. Maybe they're still really on life support. It's saying there's a lot more going on here than the media or the governments want you to believe.
I couldn't agree more. If you look at a chart of Deutsche Bank, the stock is trading at $13. It's probably the worst looking chart out there. In fact, you could go back to 2007. This thing is now below its 2008 lows. So Deutsche Bank looks horrible on the charts, and I think that is definitely a barometer. Then you can look at countries like Italy. It's finally getting a little bit of press, where you have this coalition government forming, and they're looking for debt forgiveness, much like we've already seen in Greece. Greece has got their own issues again. I mean, there's just so much negative stuff going on in Europe, and then you have Mario Draghi continuing to just buy debt endlessly over there just to keep this thing alive. It's just a failed science project, and we've been talking about it on your show for years. And, with the dollar going down, everybody was thinking Europe looks great, everything is good, but it is just a disaster, and it's going to get worse before it gets better. So, again, it's tradable, and that's what we look to do. But the dollar, right now probably heads up to around 94.50 to 95, takes a little bit of a pause, and then, as we go longer term, I think the dollar continues to go higher. So we'll see how it plays out. Nothing goes up in a straight line, but we have had a tremendous move in the U.S. dollar index. And remember, that's the dollar versus a basket of 6 currencies, and the most heavily weighted currency is the dollar in that basket is the euro.
And the whole thing is fascinating because you totally nailed this. I'm not just kissing your butt. You nailed it. And certain other moves, like Dr. Charles Nenner, he called the VIX index like 2 months ago. It went from 13 to 51, and then it crashed back down. What's your feeling about volatility?
Yeah, I think volatility, when we get volatility back down to 12 or so, I think it's a buy every time in 2018. The markets overall should be range bound, and we get down to the low end of the market, say on the S&P 500. When it gets down to, somewhere around 25, 25, the February lows, then the markets will bounce. Right now, I think we're at the high end of the range, so I actually like volatility here myself. We're just not seeing a lot of participation in the market, meaning the volume trends are pretty light right now, which is a little bit strange to see how light it has gotten. But, once we get a hard, heavy volume sell-off day, I think you'll see fear come back in the market. And, there's so many catalysts out here that could occur. I don't know which one will, but the charts are now telling me we're once again at the high end of the range, and we've been making a series of lower highs in the S&P, and I think that's what we're looking or possibly doing again. So it doesn't mean it's a death sentence for the market, but 2018 is what we call a choppy year, and it's going to mimic 2008 a little bit with the choppiness, but we're not going to have a Lehman-like event in the U.S. or anything like that. But I do think we're going to see continued choppiness really into the fall season.
Really? Well, that's remarkable. And so, Norm, just looking ahead there in your crystal ball, this is going to be a new normal than what we've had for the past 2 years, which was just like a set it and forget it mindset, right?
Yes, absolutely. So, in 2017, it was really just buy and hold, and everything went higher. There were really no problems. You had the tax cuts that, gave a big shot in the arm to equities. And, now we've just gone through earnings season here, and companies reported pretty decent numbers for the most part. Some didn't, but the markets held up pretty well. So, all in all, it's just going to be one of those years where you'll see just we'll go down into the low end of the range, then we'll bounce and we'll come back up to the high end of the range, back to the low end of the range, to the high end of the range, and we're just going to see this choppiness somewhat in a sideways channel. And then when we fall season, volume probably lightens up again, and we get a nice end of year rally, and the markets will finish up 5-6% or something like that. But that's what I'm thinking. I'll have to readjust my strategy as it goes along, and I see the patterns unfold. But that's the overall map that I'm looking at right now.
That's fascinating, which means that you can't just buy and hold. So is it what you would call a stock picker's market, or do you just play the volatility?
You could do both. But it is a stock picker's market. So I'll give you a great example. I just closed out a trade on United Technologies just the other day, which I picked up on May 3rd. I picked up on May 1st. And I made 7 points on the second half position. Now I'm out of it. Maybe it goes a little bit higher from here, but that's how it is. You're going to find these stocks that are beaten down, that come down sharply, and they hit very, very good support levels, and that's where you could get involved in those names. And then other names that are very, very popular. If they get up and they get to these extreme levels, then you want to be out of those names and wait for pullbacks. But 2018 is completely opposite of 2017. It is completely a stock picker's market, and you really have to know how to navigate. Otherwise, you're better off just sitting in an index fund and just waiting it out.
Yeah, which is potentially dangerous, though, sitting in an index fund, isn't it?
Well, it's dangerous if you bought it at the top, but yeah. if you sit in an index fund and just say you want to buy the spiders, the spiders go to 250 or maybe 245. That's a spot where I would get interested in it. Ultimately, this is a range bound year, so you just don't want to buy at times like right now that where we've had a good run for the last 6-7 weeks. So that's something I always try to tell traders, like, hey, get used to when everybody loves something, you don't want to love it. When everybody hates something, that's when I want to love it. I always call myself a good Samaritan trader, because when somebody can't take it anymore, I usually will take it off their hands. And when somebody wants something so bad, I'll usually just give it to them.
Yeah, well, there's a new movie out called Bad Samaritan. Maybe we ought to find out about that. It's just amazing, though, to watch this thing unfold, because it's not going the way anybody ever expected, right? I mean, nobody predicted this really, but you, pretty close.
I've done pretty well. 2018 has been a blockbuster year for us, and that's so far so good. Again, I always tell traders we're never going to be perfect. It's just a humbling business, and if I've learned anything over the years, I've learned that markets have energy to the upside, they have energy to the downside, and we always try to anticipate the anticipators, is what we used to say in the 90s. So again, you just have to look at the charts and just try to take price, pattern, and time and put them together. One thing the legendary trader Jesse Livermore used to say the stock market is never obvious. It's designed to fool most of the people most of the time.
Yeah, and it does.
So that's this kind of market. Now, if you're like Warren Buffett and you're in the stock market, and you've caught, the greatest rallies of all time, hey, listen, God bless them. The guy's made fortunes, and my hat's off to him. But if you're, a trader and, you've dealt with markets since, say, 2000, you've seen some pretty amazing crashes. And, for me, I like to, I'm considered a bit of a market timer. So, I like to watch the trends of these markets and get out when it tells me to get out and get back in when it tells me to get back in.
And like we said, the market's always communicating. It's just whether or not you can hear its message, right?
That's 100% right. And the way it communicates to us is by the technicals, looking at these pattern formations. Remember, human nature never changes, therefore the markets don't change. Now, I know a lot of traders believe with all the algorithms that are out, but these algorithms are still programmed by humans, and human nature just doesn't change. So again, I prefer that the algorithm in place. I like high frequency trading, and they benefit us. So again, just watch the chart patterns. The chart will tell you everything you need to know.
How do you think how high frequency trading really benefits you, the market participant?
Well, for one thing, it keeps liquidity into the system, and that's very good for us. And number two, we have a way of reading the charts, and we call it reading the tape. And very, very often we can see just by using the patterns and the structure of the patterns when a market is about to pop or break out. So again, it's not a perfect system, but it's a very, very good system. And with high frequency in there, you get rewarded a lot quickly if you're correct, and that helps us a lot. And I still prefer it, and I like that liquidity in the marketplace.
But doesn't that liquidity dry up, Nick, once they get a little scared off, once the market starts going down?
Well, once the market goes down, believe it or not, there's actually more liquidity because you have so much sell pressure, and then you have the market makers, which are obligated to buy, right? So they got to buy and sell. So they have to make a market in that particular equity. So, it doesn't really, as long as we're on the short side, we actually prefer it if the market's going down. So it goes down a lot quicker when it falls. The old saying is the markets take the stairs up and the elevator down. So,
the stairs up and the elevator, that's a great old truism of Wall Street.
Yeah, so we kind of prefer it.
They might even take the ledge off the side of the building if it goes down fast enough, right?
I've seen it.
The swan dive off, right? The swan dive off the Empire State Building, if you will. It's an amazing time to be around here, and you just keep thinking, wow, you think you've seen it all, and then you get surprised, Nick, right?
Yeah, you think you've seen it all, and then the markets will come up with something new. And the irony of it is a lot of people always ask me for the catalyst, and they always say, hey, what is it going to be? And I always say, well, there's these problems out there. And then very, very often the chart will tell us there's a problem out there. It won't be any of those problems. The news will report something completely different. So, I never try to even predict the catalyst. I never, ever know what the catalyst is going to be. It just happens. And, the charts are usually one step ahead. But like I said, there will be times where you're humbled by the market, and you do get it wrong. Anybody that tells you they're 100% correct, you know what they're full of, and it's a humbling business. But
what are they
we could
selling
bat
you?
a good average in this business. You're going to make a good living.
And that's really the key to it all, and that's what you teach people how to do, right?
That's correct. That's what we do. And again, we've been doing this now. Our company's been around now over 11 years. So we've now taught thousands of traders, and the funny thing is, when markets were going a little bit haywire, my phone rings off the hook. So, I'll get people calling up and saying hedge funds and other money managers, and they'll say, hey, what's going on? Can you help me here? And I'll say, how come you're not using the charts? And they're fundamental traders. They're looking at PE ratios. They're looking at earnings to book value. They're looking at a whole bunch of different metrics except the charts. And I always chuckle at that. And I say, what does that stuff tell you? I said, doesn't money flow going in or out of the stock, isn't that all that matters? Yeah. And, they all want to buy on these, fundamental reasons. So it still amazes me to this day, but keeps me in business.
So, yeah, really your thing is when in doubt, go back to the chart, right?
I'm always about the chart. So to me, it's always about the charts. And, as you could just look at some simple things on the charts, just like, is the chart making higher lows or is it making lower highs? What's the formation? Is it going sideways? Is it in a channel? Where's the moving averages and where is the stock trading adjacent to the moving average? There's so many different technical pictures. They always have that saying, a picture is worth 1,000 words, and I think it's worth 10,000. So I look at a picture of a chart, and some people will see chaos. I see a Picasso. And, if traders get to appreciate and read the charts, they'll be surprised how much more they can learn by just, hearing all the noise of, earnings and book value. How many times have you heard a company report great earnings and the stock plunges that day, right?
Yeah.
And it guided higher and they said, this is the best and we're getting better and we're going to create this, that, and the other thing. And the next thing you know, the stock is in the toilet bowl. And that's because the market is a forward-looking mechanism. It's a predictor of the future. It looks out 6 to 9 months and it already knows. So I think, that's why I use charts, because it's all about money flow. Are the institutions getting into a stock or are they getting out of a stock? And really that's all that matters.
So what about the manipulation and all that? Does the chart kind of allow you to see the manipulation without getting caught up in it?
Absolutely. We know there's manipulation in the market every single day for one reason. We know that before a big announcement, there's always options bought on a particular stock in a huge amount. And, you could go back and look, and before any major event happens, somebody always knows something, right? That's the old saying, follow the money. And we always know that somebody always knows something, but we don't know anything except that the pattern is telling us something. So, we don't have inside information or anything like that, but we have the chart pattern, and the chart pattern, I will take that over any other pattern. And, it really is still amazing to this very day. And I might have told you the story once before, Kerry, but at one time I was at a party and there was a CFO there of a Fortune 500 company. And the guy had a little bit too much to drink and he was blabbing off, and somebody introduced me to him, and they said to me, "Hey, this is so and so from this company," and guy was like, "Buy my stock. My earnings are gonna, be off the charts. They're gonna be the best earnings." And I looked, and I knew the stock. I knew the company very well. And I was like, "That stock's a short. It's not even going up anymore." And that morning, I'll never forget. The earnings came out on a Tuesday morning, I think it was, and the stock popped, and it was up big in the pre-market, and then it just, once the opening bell rings, it collapsed, and it was down about, 15, 16% that day. And I said, There you go. It's all about the chart. It has nothing to do with the, with the numbers.
And you think you're getting it from the horse's mouth. The insider, the guy who knows where the dollars are buried, where they're going in the company, and yet not the case. Not the case.
Yeah, that was not the case.
That's
so,
really cool.
Sometimes I always tell people, I said, be careful where you get your information from. Just take the charts. They're real time, they're live time, and they don't lie to you. They're just telling you the truth. Now, this CFO didn't lie either. His numbers were very good. He did guide higher, but the market already knew what those numbers were going to be. The market had already priced it in. And needless to say, that stock has never seen that price again.
That is a cool story.